Welcome to Leaders in Lending. I'm your host, Jeff Keltner. This week, we're featuring my conversation with Matt Cammarota, the head of retail lending at Liberty Bank. Matt and I have known each other for a while in the context of the CBA HELOC committee, and we really have a good conversation about the current trends in HELOCs, what he sees as the future and the way forward in that product, and also maybe other products that the experiences in HELOC are pointing the way towards for lenders. And we also delve into his efforts to transform the processes of some of the retail lending products and not just kind of make a digital makeover, but really fundamentally think about the processes from their core and remake them. And I think it's a really great piece of advice and a conversation for anybody trying to think about not only how do I quote unquote digitize my lending or retail banking experiences, but how do I fundamentally improve them from the customer's point of view. So a very insightful conversation, and I hope you enjoy it. All right, Matt, thanks for joining the podcast. I appreciate it.
Thanks for having me. I'm really excited to be here, Jeff.
Yeah, I'm looking forward to this conversation. You and I have known each other for a couple of years now. Mostly, I think we met in the context of the CBA and the HELOC committee, and I've given a few presentations to that group. And I'm just kind of curious, as someone who's been in that space for a while, like, what's your take on the state of that product, that space in the lending industry overall?
Home equity lending in general is a really tough place to be. We've been talking about it for years in the committee. Balances continue to run off. I think in the 2008-2009 timeframe, they peaked at around $700 billion. And today it's around $250 billion. And that, if you just think about that for a second, it's remarkable. And if you look at the balance sheets of the top 30 lenders in the country, all of them over the last 12 to 24 months have experienced, most of them, I should say, double digit, but all of them except for three have experienced home equity balance decline. And it's been a really tough place to be. And there was an article I was sharing with you earlier, 2 years ago now, and it said, will home equity lending ever recover? And maybe the answer is no. If you just think about it, it's way less than half of where it was at its peak.
So what do you do about that as a bank? I mean, you look at that, you've been responsible for that product. You're a product owner, balance sheet owner, business owner. How do you respond to, the lack of demand and adoption of the HELOC product? And what do you think is the way lenders should think about that?
I'm not so sure it's a demand. So consumer savings rate is definitely up. How much money borrowers are spending on debt is down. It's actually at historic lows. I was just looking at the debt, financial obligations ratio that the Fed reports, and it's still significantly below where it was pre-recession. So, for example, household debt service payments as a percentage of income in 2007 was 13%. Today, that's 8%. And just again, think about that. Consumers today are spending a lot less of their disposable income on debt service. So household debt service as a percentage of disposable income, 13% to 8%. So there is demand. However, demand is still there for certain products. While home equity balances have come down, personal loans have gone up. So there's really, I think, two things that lenders can do. One, you could either kind of give up on home equity or look at other products like personal loan. Or two, you can just look at the home equity experience and try to get back to where we were pre-recession, not necessarily from a credit risk appetite perspective, but just from a process perspective. So here's the thing, Jeff. In 2006, 7, and 8, lenders were originating home equity line of credit in days, right? And it was a really great customer experience.
Yeah.
Since then, the experience has only gotten worse. I think we're,
Why is that? That's a little bit of news to me. Like, what, I didn't realize it had been so much better. Maybe I've not, before I was in the space, so I didn't pay attention. What's happened between then and now that it's actually, like, I think cycle times are like 45 or 60 days on average. Like they're pretty long. What's driving that lengthening of the cycle?
I think it was a few things. I think one, it was, a complete overcorrection of the recession, right? A lot of banks just stopped. And from a risk perspective, look, when we were doing these in 3 to 5 days, there was a lot of no income verification or reactive no income. So Jeff's got a 740 score, 75% LTV, everything looks great. You've provided your income docs, but I'm not going to look at them. I'm just going to give you the loan. There was a lot of that going on. there's almost none of that going on. I think we did a recent survey at CBA, and I think it was, one out of maybe 30 or 40 lenders that said they were doing a little bit of reactive NIV. So that, I think that's one. But two, I think from a regulatory perspective, QM and some other regulations have gotten difficult. We talked about this at CBA. I'll give you an example. We as Consumer Bankers Association, or we as collective banks, need to work with our regulators to make sure that there is consistent application of regulation. So for example, automated valuation models, AVMs, those were used broadly in 2007 and 2008. Recession happened, they pretty much went away for a long time. There are still probably half of the banks out there, and Liberty's one of them, right? My prior employer was one as well, not using AVMs, whereas we were using AVMs before. So I think, not to say that AVMs are the be all end all, but getting an automated valuation complemented by a property condition report for a $50,000 loan with really good credit just makes a ton of sense.
Yeah,
and
if
I
you
think
get the right LTV, you don't want to, you don't have to look too deep if you got the right LTV. It just doesn't make any sense.
So I think it's one, making sure that we're getting consistent application from the regulators, but honestly too, I just haven't seen anybody focus on home equity. We have, and I said this a little bit at CBA, we have essentially made the home equity process mirror the mortgage process. And so we're doing, drive-by appraisals, full appraisals. We're running it, almost underwriting it like it's a Fannie Mae loan.
Yep.
And it's taking 2 months. And so, so again, one, you can go personal loan, which a lot of lenders have, there's no doubt. And personal loans, in the same time where home equity went from 700 billion to 250, personal loans has gone from like 300 billion to 800 billion, right? So personal lending has exploded in a good way. Consumers are still being reasonable with their debt. So that's one. But two, and what I'm really excited about doing here at Liberty is, what can we do to the process to get back to, be very aspirational? So look, we have to go from 60 to 30. But after that, can I get a HELOC done in 5 days or 10 days? And that's really what I'm thinking. And I'd like to think, if I can get it there, that we'd actually be in a position where we could actually grow originations and actually start to see some balance growth.
Yeah, it makes sense to me that there's a place for that in the market, just like there's a place for personal loan. Probably, there'll be a balance of those in the future, but it doesn't feel to me like once you go away. I mean, you talked about you can either give up on HELOC and implement something personal loan, or a strategy too. You can kind of get back to pre-recession, if not better versions of the HELOC. I mean, isn't there a both and kind of option here too, which is, probably both are valuable for a lender to be pursuing?
Absolutely. And I say that kind of tongue in cheek because some of the largest lenders in the country have abandoned the HELOC program. And they may be back, but I'll just give you an example. One of the largest banks I had a HELOC with for 10 years, the draw period was up. I went to renew it and they said, sorry, we're not doing them anymore. So, so I say that a little bit tongue in cheek, but absolutely. And that's what I'd like to do, right? Let's fix HELOC. It's still a good business. I think that there's still an appetite out there. I think that there's still a way for HELOCs to play. It's an interest-only payment. It revolves. A personal loan can't do that. I mean, I think the revolving nature, it's a 10-year commitment, you need 30,000 relatively quickly. You can take that, if you're in a position where you're getting annual bonuses, right? And you want to spend some of that money before you get the bonus, a HELOC is perfect for that. So there are plenty of revolvers out there. But yes, of course, I think that as a bank, Liberty, for example, currently does not have a personal loan program. We're losing out. There's no question. So I think it is a matter of and, not or. Well,
talk to me a little bit now. So you came to Liberty relatively recently from a larger institution. I'm sure people can figure out which if they find you on LinkedIn, when it's not blocked by the firewall. Talk to me a little bit about your decision to move to Liberty, why you were excited to come here, and a little bit about kind of what you're trying to do from your position there.
Sure. I love my prior employer. Great place, great people. And it was as David Glidden, who's the CEO of Liberty, has said, certainly not running away from something, it was running to something. So there were really 3 things that always stand out to me about Liberty. One, their reputation in the community is just second to none. They support local organizations. They've been around forever. I mean, Liberty is basically a 200-year-old mutual. So they've been in the community. They've been in my backyard for my entire life. I think too, the culture is unlike anything I've ever experienced, and they pay attention, strong attention to fit when they're hiring and recruiting. And so when you get here, you see it on the inside. Everyone you talk to, and again, not that this wasn't the case where I was, but it's just different. Everyone you talk to wants to help. Everyone you talk to is really looking to do what's best for Liberty, and that's pretty great. But third, and perhaps most important, Jeff, was just the opportunity to lead retail lending. I had a couple of different roles at my prior institution, but Liberty is again, very well known, great product, great people. And I actually see that my skills in terms of, leading retail lending and updating their processes will help significantly. And so it was really the opportunity that was exciting to me, the opportunity to potentially build a personal loan program, the opportunity to grow mortgage lending in our banking center footprint, and to grow and expand home equity lending as well.
Yeah. So I want to get to your priorities for the retail lending side, because I am cognizant that it's not, for many banks, not a primary focus, the retail lending side. And so I'm really curious where your priorities are. But I wanted to go to your second thing of your three, which was this kind of strong culture of doing what's right for the bank. And I feel like that's something that in many larger institutions and many financial institutions, it can become what's better for my career, what's good for my team, not what's good for the bank, being the thing that people end up focused on. Maybe they would never put it that way, but that's practically speaking what happens. How do you think you maintain and build a culture where people are really trying to do, in my mind, either right by the company or ideally even right by the customer, right by the consumer? Even, like I'm sitting here saying, yeah, what's the best thing for Matt, not for my customer, not for me or the bank, as the kind of driving force. And I feel like it's easy to lose sight of, particularly as you get away from the line roles where you're 2 or 3 levels removed from, picking up the phone and talking to a customer. How do you think a culture like that is built and then maintained over time that puts the consumer and the institution first?
It's really tough. I talked a little about it. I think as you're recruiting, you have to just pay really special attention to it, the fit. And I can tell you that as, Liberty is looking to bring on various executives, or even when, we're hiring an underwriter or whomever, right? Mm-hmm. We're looking at how will they, what are they like, and what will the fit be like? And, do they have that type of approach where, I'm going to do whatever it takes to help the team type of thing. And mm-hmm. So I think that's one, but also, just making sure this environment exists, top to bottom, you have to have it. And I just think it's one of those things that gets really hard. I think you said it. It just gets more, the larger you get, the more difficult it gets to maintain.
Yeah, no, it's definitely true. And it's a special thing when you have it, because, if you end up somewhere that doesn't, you realize how quickly it becomes either team versus team, or kind of a game where you're turning the dials and trying to optimize something, but it's not, the thing that's best for the company. And people who step back and think about what's right for the consumer, what's right for the company, it makes for a special environment. So let's get to your third point on what brought you to Liberty, which is the opportunity to kind of lead retail lending. And as I said, one of the things that surprised me as a consumer, before I entered the finance industry, almost 10 years ago now, my only interactions were as a consumer. And so I think of banks as retail, branch, consumer lending. And then you get into the industry and you realize that balance sheet wise, most of them are much more on the commercial side. And the retail side is actually not the majority of the business, which is, as a consumer, you don't see, but then you realize in the industry. So I'm curious, as someone who's leading retail lending and was attracted to, Liberty because of the desire to focus on retail lending at the company level, what are the areas you're really focused on? Obviously, you talk about HELOC and getting cycles time down, but how do you think about your priorities from a retail lending point of view?
Yeah, I think number one is process transformation, and I think that's, maybe I'll talk about that later in terms of advice, but we tend to focus a lot on digital experiences and third parties, and all of that's great, but it's really hard, or you just simply can't digitize a bad process, or adding a great online application doesn't really do much if your process is clunky. So It's really and when I say transforming, I mean it very like really taking this to a different level. So mortgages, for example, like we have to. So here's another, statistic. If you think about it, non-bank financials had about 20% of origination share about 15 years ago. Today they have 60 or more. So banks are losing share, and that's residential mortgage, right? So why? It's because that's all they're focused on, and they have a 100% focus on quality. Non-bank financials today on the residential mortgage side are getting loans done in 30 to 45 days, and banks are taking 2 months. Customers are taking notice, and many people that I've known for years that have traditionally gone to a bank tried a non-bank financial that they never heard of, right? And said, hey, it's a bank. It's not, they're going to sell my bank to Fannie Mae, or they're going to, who cares? They're just going to originate.
Yeah.
And they get a great experience. And so we need to focus on that. So I believe strongly that by getting our processes to a point, our cycle times on mortgage, for example, on a purchase, less than 30 days, that we will have something really special to talk about. Our sales teams will have something to talk about. Our marketing team will have something to sell. We need to differentiate ourselves. So you're coming Liberty, great environment, great community, great bank, be community kind. We support the community. There's got to be something a little bit more. Customers need a really good experience. And so that's, transforming the process and how we do business is priority number one.
I think it's a really critical point, because I see so many people focused on digitization. And to your point, I think you said if you digitize a bad process, it doesn't get you anywhere. And I see a lot of that where the digital is the focus and not the experience that you're enabling through the process. And if you don't fix the underlying, then like a 60-day process that I interact with through my computer as opposed to a 60-day process I interact through in the branch is not really better for me as a consumer as much as an easier or simpler process. How do you think about the investments you make to do that? Because that's both culturally hard, like you're actually changing what people do. And I imagine from a technology point of view, a lot of systems are built around the current way of doing things. And you've got I would imagine, a bunch of investment in actually enabling totally different processes. So how do you go about like rethinking those and then enabling a different process to actually take hold?
The biggest investment is honestly on, so we just hired someone that's got great background, Lean Six Sigma, but someone that's going to lead our transformation office for retail lending. And so yes, the processes or the systems were kind of built around the processes, but that doesn't mean you can't fix the processes. So that's the approach, and that's the investment we're going to make first. And we have to make that investment before the tech. We have to invest in that. And it's interesting because I just don't see companies, banks anyways, taking this approach. I think some banks may have a continuous improvement program. They may be leveraging some of the Lean Six Sigma methodologies. But it just doesn't seem to be the norm. I think most of the time it's a Band-Aid process, and hey, let's bring in this vendor to do appraisals, and let's try this with titles, whatever it is. It's really got to be kind of this true end-to-end. And almost back to your question about culture. I mean, I give the Liberty leadership team a ton of credit. They're trusting what we're doing, and they're making the investment, and that's really significant. And so we've hired someone to lead a transformation office for retail lending. He's going to get started just talking to people, and from a change management perspective, change is tough. What's a little different, however, is I think the last 18 months have really shined a light on all of the blemishes. And I think while change will be difficult, it will be a lot easier because the last 18 months, especially in the residential mortgage and home equity lending space, has been really, really difficult.
Yeah. Yeah. And I also love your word transformation, not just a focus on process. I do think too often we take as a given things that we need to question. And I talk about like first principles thinking. How do we always collect X in the process? Well, like why? And going back and saying, hey, let's actually ask the question of why we did, not just try and like make it easier to finish the process, but like actually question how the process ought to work is a fundamentally different exercise. And I agree with you. I don't see that exercise being undertaken all that often versus saying, hey, we're going to put in place some tech to speed up the same process, or put a digital front end on the same process, but to actually go back and question and transform that process, I think is a fundamentally different approach. And I'm excited to see how that goes for you guys.
Thanks. Yeah, again, we're being very aspirational, right? Purchase money mortgage, can we get that ideally 20 to 30 days, right? Can we get a home equity? And again, aspirational, right? Like years from now, can we get that down to 10 days? I mean, that, and again, compared to 10 minutes,
Yeah.
but I still think if we have something to talk about, it will make a pretty big difference.
I think it'll make a big difference. We certainly have seen in our experience that any amount you can simplify process, cut down on time, makes a big difference in customers' experiences and satisfaction and conversion. Ultimately, what does your pull through look like? And so I'm excited to say that I think you can do it. It's a question of it's a question of execution. The capability in terms of what could be done is certainly there. So it's a question of, can you? I think the cultural transformation and bringing the company along with you on that journey is maybe the harder part than just why I think banks have such a challenge in doing this. Is it's like a startup comes in, there's no history, there's no loan officer that's done anything, there's no broker that's done anything, you just start from scratch, and transforming an existing entity and team is the harder part of the process in many ways, and defining the end state you'd like to be at. And that'll be the interesting thing if you really have the cultural alignment to do that and can execute on that part.
Really good point.
All right. Anything you wanted to talk about today that we haven't covered, or you thought we would talk about, or points you wanted to make that I didn't do a good job asking about?
No, I think the only thing, it's interesting, relative to personal loans, we've been having this conversation of buy, build, partner for many. Like I remember at CBA 4 or 5 years ago, we had a session called, so basically as a bank, are you going to buy loans, or are you going to build your own program, or are you going to partner? And it just seems that the way the industry is going, especially with you and your company, like partnerships seem to be the thing of the future, which I just think is really interesting. And, I would love your perspective on that. I just don't see many banks trying to go it alone anymore.
Well, I think particularly when I look at personal loans, so I tend to agree. I think personal loans is probably the sharp point of the spear in this way, because you really do, to be competitive there, it really is minutes, not just to get a rate, but to get a loan. And that may not need to be true for HELOCs or mortgages or some of the larger, more complex products, right? But for those kind of smaller dollar, shorter, 2-3 year, $5,000, $10,000, $20,000 loans, I think it's true. And that's a level of technology build that's, it's a real different thing than banks have built. So I think it's hard to build. But my intuition is the buy, like just buying loans, it's a real short-term strategy. Like if you just have, $50 million sitting on your balance sheet that you need to put to work somewhere and you can't generate assets, like, okay, you got to buy them the way you go buy T-bills or anything else when you've got a treasury problem. But my sense is everybody wants to be originating. They want to be building customer relationships, and partnership makes a lot of sense. And I think you're finding the fintechs that also see the same thing, where partner is their path to the future, and they're accepting that that's probably better than trying to go it alone. So not all of them, there are fintechs on both sides of that, but I think you're seeing, an alignment of both fintechs realizing partner is a good path, and banks seeing that as a better path to what they ultimately want as well.
It's true. It's been interesting because some of the companies that have said, all death to banks have, come around and said, hey, how can we partner with you? Which is great. And there's also new, relatively new, entrants that are just focused on the white label approach.
The pure
you just made one comment that I want to highlight. You're right. You buy loans, there's nothing from a household perspective. And we at Liberty, we actually see it's not just a balance sheet play. It's a way, we actually want to grow our households. I think we're looking for 9,000 new households. Like personal loans is a way to do that for sure.
Yeah, I think we see more lenders looking at what I call leading with lending, where I think the traditional acquisition model is get a deposit account and then cross-sell a loan. And increasingly, I think people are realizing you can, particularly through partnerships where there's customer acquisition channels that are in place that are active, like you can acquire households through a lending product and cross-sell the deposit and the other products. And it's a different way of thinking for many institutions, but I think it's one that's evolving and emerging right now.
Great.
All right, Matt, I got 3 questions I use to wrap up interviews with everybody. You know what they are. I know because I told you in advance, but I'll go ahead and ask you these now. So number 1, what's the best piece of career advice you've ever gotten?
I think the best piece of advice was, making sure I focus on relationships. And it sounds so obvious. And it's something that I did, but probably not to the level that I did. And this is probably almost 10 years ago, maybe 7 or 8, where you really have to make an effort, reaching out to people, communicating your strategy, engaging key stakeholders, bringing people along with you, whomever, right? Whether it's your team, man, up, down, across, your compliance, risk partners, whomever, just making sure that just being open, direct, and transparent with everybody. And it doesn't happen naturally, especially in the last 18 months. So managing these relationships, especially in a pandemic, has been something you have to focus on. But that's probably just make sure, the advice I had was, just spend a lot of time on it. And I have, and it seems like it's paid off.
Yeah. Usually, however much time you think you need to spend, like double it or triple it. And now you're in the ballpark of what you probably need to spend. All right. Second question. What's the best piece of advice about the consumer retail lending space you've ever gotten?
Yeah, I think we talked about it. I sound like a broken record, but just, lead with process. I think you need to, kind of transform, fix, optimize your processes. Again, RPA and OCR and all sorts of business process management tools are great, but if you have a broken process, they won't do anything for you. So, focus on the process, clean it up, but take a holistic view, right? The Band-Aid approach doesn't really work.
Yeah, I think that, I always say starting with the consumer experience, like everything must be in service of that. And nothing is a good in and of itself unless it's actually improving ultimately the experience you're delivering to that customer.
Absolutely.
And then my last question, what's a bold prediction for the future? The
I
bolder the
don't know
better.
I don't know if you'll love this one or not, but my bold prediction is that home equity balances will finally start to go. Now, look, this has been a trend. It's been like a straight line down.
Yeah, you could say like it's almost shocking how consistent that decline is.
And I do believe it will. I'm going to make a bold prediction that in 2024.
All right, by 2024, we've got a rebound. Now, we're gonna have you back, and hopefully, you're leading the charge on the rebound of HELOC balances in the 2024 time frame.
That's right. Yeah.
All right. Well, Matt, thanks so much for taking the time today. I appreciate it. This was a great conversation.
Yeah, it's been fun, Jeff. I always fun to talk to you. Thanks.